And joining us to take a look at cryptocurrencies, Bitcoin specifically, we've got Anthony Moro, the CEO of Providence Blockchain Foundation. Anthony, good to have you with us here this Tuesday. Thanks for sharing part of yours with us. Let's begin with Bitcoin, retreating some from a retest of the all-time high. We saw up around 74K, but still a win for the bulls in many ways when you look at it at current levels.
Yeah, we're still very excited about Bitcoin. I think it's a revolutionary technology. It's innovative. It's importantly global. It's a lot of things that people in the U.S. don't really appreciate. And it's built a large network of evangelical followers. It's really become a new asset class, and it has a really bright future.
It does, and one could argue, especially with the recent approval of the ETF, ultimately we've seen that more broad-based adoption. The one thing I feel like, though, Anthony, is that volatility still remains at elevated levels, right? I was kind of hoping that the ETFs would kind of minimize that a little bit and dial that back some, but even a move like we saw yesterday up 6-7%, I mean, for me as a retail trader, it's kind of tough to stomach big moves, intraday swings like that.
Yeah, and I don't think we're going to see that subside anytime soon, really. Again, it's important to understand that ETFs are different. Bitcoin and cryptocurrencies are different than traditional stocks. They don't operate under the U.S. trading hours. They are a global phenomenon. So when the U.S. goes to sleep, they're still trading Bitcoin and other cryptocurrencies in Asia. So you'll continue to see that volatility, I think, until this market becomes more mainstream. But I would say the ETFs were really critical for traditional adoption. Many investors still aren't comfortable using a digital wallet, and they prefer to use, for instance, their Charles Schwab account. And it's going to continue to be volatile for the foreseeable future, I believe.
Anthony, talk to us about the ETF flows, staggering levels, right? Initially, has that been sustainable? Have we continued to see that type of interest following?
Yeah, so I mean, what I can say is I was at BNY Mellon when we acted as trustee for GLD, the gold first commodity ETF, probably 15 or 20 years ago. And we saw a similar pattern. You buy in the rumor, you sell in the news, and then you see a long upward trend in assets outstanding. The difference between Bitcoin and gold, of course, is Bitcoin supply is capped at 21 million Bitcoins. And just basic economics of supply and demand, the ETF creates mainstream demand. And with the halving just around the corner, we're going to see continued reduced supply. And I think after the next halving, we see less than one new Bitcoin per day. So you hit that 21 million number, and that's it, unlike other commodities where you can still extract more out of the ground.
Anthony, not just having around the corner, you also have the expectations that we could see an Ether ETF approved as well in the near future. That also kind of providing a little bit of a tailwind here, I feel like.
Yeah, ETH is one of my favorite projects as well. I mean, it is a properly useful blockchain. I mean, it has applications across, gaming and trading and the metaverse, and it really is very exciting from a fee perspective. You can see a business growing. That at the end of the day, these blockchains are just operating systems that their communities use, and they do have to be sustainable. And that's where we're seeing a lot of exuberance in the meme coins. Projects that really you have a hard time seeing how they'll be sustainable over the long term. But with Ethereum, it's perfectly clear that this is going to be a long-term, very sustainable ecosystem.
I feel like we focus so much on the future side of things here, Anthony. We kind of lose sight of that ripple effect that this adoption, this broader-based adoption has had. Can you talk to us about some of the companies, for example, related to and that are associated with the blockchain that have benefited not only from the rally we've seen in Bitcoin, but also, again, the ETF approval and just the advances that we've seen in terms of technology in general?
Yeah, so I'll talk just a second about Providence. So Providence is a public blockchain, but we're built very specifically for regulated financial services. Our opinion is that all of the world's financial assets will be tokenized over the next several years. And what it does and what we're doing at the end of the day is we're making financial assets cheaper, safer, and more convenient for investors. And because the blockchain is built for regulated financial services, there are different projects that do different things for different audiences, and Providence is a regulated financial services audience for sure.
Cheaper, safer, and more convenient definitely feeds into what investors are looking for, that's sure. So apparently, I'd imagine there's been quite a bit of demand for that. Let's talk a little bit about how this time last year, things were a little bit of a different story, right? Kind of a bit of a darker cloud hanging over the market, right? Which is cleared. But what a difference 12 months make, right? Any regulatory concerns that are still kind of lingering, hurdles that we still need to jump here ultimately? I mean, we're still kind of dealing with the SBF ultimately. We've got Binance, which is still kind of making headlines right now. And even this morning, I was watching an interview with the CEO. So still kind of trying to work through some of those difficulties, some of those struggles that we saw about a year ago.
Yeah, I mean, most of those malign activities weren't directly related to crypto. They were crypto adjacent for sure, but they were scammers that were doing things in a environment that you could have done in regulated financial services or the Nasdaq Stock Exchange with Bernie Madoff. What we're largely focused on, though, is for the real world asset use cases. For instance, stable coins that get a lot of press today. They're a great use case, and they allow inexpensive and instantaneous payments between any two parties without using ACH or wires. And we think we're in the early days of this industry, and we expect some really great things from there. Home equity is another asset class we're really excited about. We think the industry sits really at the nexus of two massive secular themes: the rapid digitization of financial markets and the supply chain crisis in the housing markets. And homeowners have more than $30 trillion in home equity that they can use, and figure and movement mortgage and guaranteed rate and others that use the Providence blockchain to ledger and warehouse and securitize mortgages and HELOCs really are saving more than 150 basis points over the traditional process. And very importantly, those savings can go back to borrowers in the form of lower rates. So these are the kind of things that we're really excited about.
Anthony, I'd imagine another exciting thing for investors here is really, as you mentioned, some of the trends that we've seen, right, in terms of gold ETFs. Years ago, the inflows and the ups and downs associated with, right, advances, 2 steps forward, 1 step back, we've seen. But definitely with Bitcoin, we've got, as we mentioned, the halving, we've got Ether, some of the other events that have occurred and created that situation. But maybe we would or can expect to see more volatility as we started off talking about, right? Because you do have this kind of 2 steps forward, 1 step back situation that's playing out. But again, kind of a win for the bulls, right? If this continues, because the trajectory continues to be to the upside, broader base adoption, and just this more kind of a widespread acceptance, simply put.
Yeah, I mean, I can't underestimate how important the Bitcoin ETF, the approval of the Bitcoin ETF were. Now, Bitcoin is very different from most other projects, so the SEC will still opine as they have the right to do on every other project at some point in time. But crypto, the construct of crypto, the technology of crypto is here to stay, and because it is what we're doing at Providence, for instance, is building the operating system for regulated financial services, and really that's never been done before in a holistic manner, and only because of blockchain technology does it allow you to do that. Right, my career has gone from having securities ledgered on spreadsheets when I first started 25 years ago to the cloud, and now really to open source public blockchains. It's just the next iteration of that technology, and that was all, of course, built on the Bitcoin white paper that came out 20-something years ago, and the technology has evolved to today. But we're still in the first inning of this industry.
Yeah, I'd imagine it's pretty exciting, right? When you consider the infancy of this process, right? This whole everything that's been playing out here, an exciting area to be in, that's for sure. Appreciate you joining us here and sharing part of your time, Anthony, taking a look here at cryptocurrencies in general, but also the blockchain. And I like the kind of separation between the two here. Anthony Moro, CEO of Providence Blockchain Foundation.